All right, what up? How are you guys? Will, how did that one we're looking at the other day go? Where are you guys at with that?
Yeah, I'm trying to remember. So that was I don't think we're moving forward on that one. Trying to remember which one that was now.
It was the one you guys drove out for. Here I can tell you.
Yeah, Birmingham.
Mm-hmm.
Yeah, man. It's frustrating. So the broker came back to us, kind of thought that the deal was dead in the water. Broker came back to us and was like, hey, we're gonna take 25K off of our commission to get this deal done for you guys. Because we were like 70,000 apart with the sellers and it's super close. And the seller's like, yeah, great, we're gonna do it. All sounds good. We sent over the LOI and they backed out. And it's like, nope, we're sticking to our price. And we're like, I'd already submitted 4 or 5 LOIs on this deal. So I was like, we're done. We're bidding against ourselves at this point. So yeah, it's frustrating, but hey man, that's part of the game. So here we are.
So what's the action steps next for this specific one?
I think at this point we're just gonna hold and see what happens, and hopefully, we'll see if they get desperate enough. We were asking for like a 2% concession on their price, and so it was not much. And even the broker was trying to help get it done. And so yeah, I think we're just gonna kind of hold out right now and see if they're willing to come down at all.
Definitely. So I like that approach. Keep in touch with the broker because obviously it's good that you don't have to go direct to seller. With this is the one time it's good having that middleman where essentially you can leverage it like, hey, just kind of let us know what else is going on. Because is the broker representing only you, or is he like your buyer's agent, or is he representing seller as well?
He's actually representing the seller.
Perfect. Okay.
Yeah.
So he'll know what's going on. He'll know what other offers they're getting in, and be able to keep you updated. And it just comes down to how serious is the seller in regards to looking to sell. This is kind of the common thing that we've been seeing and talking to other people, and I think it's important for everyone here to know as well. There is that disconnect on expectation and price, compared to what you can actually offer and are offering. So that's a big thing that's going on right now. It's really hard to be basically like on the same page when the seller's expectations were so high a few months, a year ago, for example, and the buyer's reality is something different, and then you have that in between that no one can really get to,
Yep.
But that's just part of the game. You guys, it's annoying because of the effort put in. It was a little more than just a regular deal, but again, it's part of it. So
Sure, man. Well, I appreciate you taking a look at it for us too, and kind of checking it out and giving us your thoughts on it. It's definitely most appreciated. So
and I don't know if you guys have explored this option, but because the difference is so close, I always say this, sellers don't love it, but maybe because it's a smaller amount. Like, hey, will seller carry that difference? We can't give it to you up front. We can't give it to you right away. What if we pay to you over 10 years? When you average it out that way, you'll realize how little of a difference that amount actually is.
it's a good suggestion.
Because like being an agent, I'm talking to lenders and like being here in California and LA, I'll talk to my lender. He's like, you guys are, the buyer would be crazy to let this deal go for 20K. Because when you actually do the numbers and you realize how little of an impact it has on your monthly payments, you're like, okay, yeah, that is kind of foolish. You know what I mean? So not saying you're wrong in your underwriting. 100%. I'm firm believe, trust me, I'm the most stubborn person you'll meet. I'm stick to your guns, don't move. Like they want to sell it, they will. They don't, like the broker's making their sacrifices as well, So in that sense, it's like, hey, if you're so stuck on that number and I'm doing everything I can, I want to show you how serious I am. And that comes down to if you guys really want to do it. And that's the good part about it, is the ball's in your court. Because there's thousands of properties out there, so you end up finding one, It's just you've kind of done your due diligence on this one. So if you really do like it, why not shoot one more shot?
Yeah, man. I mean, we first submitted an LOI at 59K a unit, and then we came back at like 62. They weren't willing to play ball at that amount. They really drove the rents in the property. And so we felt comfortable submitting an LOI at 64. Seller wanted 65 a unit. And, according to the broker, they said that was going to get it done. And it didn't. So here we are, man. But so seller carrying the amount. So essentially they explain that maybe a little bit more.
Sure. So how are you, and I think just to remind me, how are you guys taking this down? What's the breakdown of the purchase price to how you're gonna, what debt you're gonna get on and how you're gonna raise the funds on the difference, if that is what you're doing?
Yeah, so it's purchase price was 64. I should have these numbers in front of me. 3.328.
So those numbers have to be exact. It's more the structure of how you're gonna get to that purchase price.
Yeah.
So while you're putting that up, just want to say what's up to everyone. This is kind of like a behind the scenes. Let's talk about something about a deal that Will here had going on. Hope everyone's enjoying their night. Eddie's not going to be here tonight, but we'll be able to continue as scheduled. And actually, I'm happy, Will, that you're kind of bringing this up and we kind of got the conversation led to this part, because I think one thing that we don't talk about enough is, sure, you've done the broker outreach, you've done the underwriting, you have your debt lined up, you know what you're doing, you have the advanced underwriting. How do you write the offer? Do you know what to offer? Do you know what to look for, how to what the structure on that end of things? So I think it's not a bad idea to kind of like briefly touch base on what we kind of do with the initial LOI, how the feedback usually is on that. And you hear us mention LOI a lot, but I'd like to at least show how we put one together. Just to get started until people have more questions and whatnot. And then that should carry us a good ways through. And then if we have some time, we can look at a deal or two. If you guys have any, if not, I can pull one up. So we'll do that.
Sweet. So what did you want from me, Eddie?
So how are you looking to purchase the property? Are you taking over, is there an assumable loan?
No, so this would be, we were looking at getting agency debt on the property.
Okay, at what rate?
That was at a 5.89%.
Okay. And then how much leverage was that?
75% LTV.
And then where's the 25 coming from?
Syndication.
Got it. Okay. So you're raising almost $1 million, right?
Yeah, we put 10% additional on top. So our raise currently at 64K a unit was 1.2, basically 1.25.
Got it. Okay. So basically reason why I was asking all these questions regards to the seller carry is you're coming in 25%. What if he carried 10%? Then you're only coming in 20 or 15%, or you lower your debt. You get less of a leverage loan from the agency, and that way your costs are down. What are you offering to anyone part of the syndication?
It's a 80-20 split. And beyond that, we're not doing any pref or anything like that. So it'd just be
Okay.
Yeah, so it's going to be just their returns, I guess, and then I think the plan to buy them out in between 2 and 5 years.
Got it. Okay. So here's a few angles to look at, and this might help with underwriting. Also depends how you underwrite it. So you want to make sure you have the appropriate calculator and you have the appropriate objective in mind when you're doing this underwriting. Is one way or another, the 10% that's being carried is gonna benefit you in two ways. One, if it's 10% that you're not carrying, raising the capital for, that's 10% that you are now not responsible to pay back, and that's also 10% that is essentially you have room for an acquisition fee, hypothetically. Those are a few options there. Where I think might be the most appealing to you and anyone investing in your deal and allows you to pitch better, it's like, hey, our loan is now 10% less. You're lowering your loan 10%, and even though you're gonna have a payment to the seller, it's not gonna be enough to. It's not gonna be higher than your loan. So essentially, I can show you the numbers here actually.
So how do you sell that, Eddie?
So what?
So how do you sell that to the broker or to the seller?
Easy. Okay, perfect. Happy you asked. So the best way to kind of get the broker on your side and the seller is, hey, I'm coming to your price. You're just not getting all of it today. If that's 70,000 he needs today, him not selling it is not gonna get him that anyway. You're gonna bring more today than he can get any other way. You're just asking for a little help on that end. Maybe it's not 10%, maybe it's just 5%. Because you guys aren't even far off. Like, let me give you an example here. Let's say the purchase price you said, I mean, we don't have to be exact here, but let's say it's at 32. You have your debt at 5.9. And you have 75% LTV, 25 here. So if you look at it like this, your mortgage payments are 14,000, right?
Yep.
But if I shift this and I go 65 and 10, you're down to 12,000. That's you created $2,000 worth of cash flow. If you're paying the seller 3%. It's a massive difference. You're saving $1,200 a month that's going towards your cash flow. Your net cash flow, obviously, this is a bad example because the numbers are all different, but your total cash flow is dramatically different. If I were to just go back, I was at 1,100. Sorry, I was at 1,100. I was not like, even in this scenario, which take it for what it is. From 1,100, we jumped to 22. I doubled my cash flow.
Wow.
And you got the deal done. That's
all right, man. Ed, you're a genius, bro. Let's get this thing done, bro.
So here's the thing with that too. And this is what especially in this market, obviously, everyone's familiar with seller carry. It's becoming more and more popular. Why I like this calculator is allows me to lay out every scenario, the different percentages, and see how it impacts my bottom line essentially. But this is how I offer it's anyway on the LOI. I have, again, these numbers, take it for what it is. This is just a template. This is by no means an actual LOI I've sent before, but essentially, sorry, I just saw the question. Possible to have a sample LOI? Yeah, I'll send that out. Just someone remind me, please. So we have offer one. So one thing I learned, because I've tried and tested this a few times, if you put your lowest offer first, they never get to the second offer. So I absolutely recommend, if you're sending multiple offers in one LOI, do not send the lowest one first. They're not going to look at the second one. Call it tunnel vision, whatever you want. It just doesn't work. I've gotten yelled at for the initial offer. I'm like, did you even look at the second two? Like the third one? I'm like, I'm over your asking price. And they're like, no, we didn't get that far. I mean, then why are you yelling at me? Because they saw only the first offer. So first offer is the highest. Now, usually, let me just change this because this isn't how I usually do it. But I'll do, let's say 10 here, 15 here, let's get 20 here. So I'd usually offer something like this. If I know there's no chance they're gonna do seller carry, this one essentially becomes a 0. So I would just not offer a seller carry here. I would do a traditional cash offer like you guys have been offering this entire time. My first offer will be on the higher end of the seller carry note percentage. My second offer will be a little less. I'll usually do this. I like to do 10% difference between my first, second, and third offer, unless the first two offers are assumable. Now, let me visualize this so it's easier. Let's say we have an assumable loan here. So these are my percentages, okay? Let's say my loan is actually 45%, which for assumable debt is not out of the realm of possibility. You would then have to come up with 55%. That's not exactly ideal. Like, coming down 55% on any property needs to be a very good deal. No matter what you're offering your syndicators or lenders or investors or whatever the case is. That's a lot to come up with on one deal. Because my thought process, and the question I'm always going to ask you is, could you put 30% on 2 instead of 55 on 1? Get what I'm saying? So the thought process is, if the assumable loan's 45, I have to come up with 55. Okay, what if we do this? 35, 20. And then I would have it at, let's say, X price. And then I just make a copy of my calculator, like I always do. Let me zoom in. Okay. So here we did 35, 20. And let's see on the next offer, it'll be 45, 10. But now instead of offering 3.2 hypothetically, I'd probably offer 2.6, let's say. So it's, you know, in math class when you'd always do the trial and error thing, where you plug in a number and see what happens, and if it works, great. If not, you would try a different number. Obviously, the better you got at it, the better you got at identifying what number works. So the better you get at calculating this and using a calculator that you're comfortable with and able to see how changing these percentages impacts your overall return, you'll see, okay, is this the return I want? No. How do I get there? And then one thing I also do, because my screen ends up looking where I have 3 tabs. This one, my lower seller carry, and then I'll make another copy. And then this will be just traditional. So we'll go 55, 0. That work? I don't think so. No. 55, 0. And I'd offer, let's say, 2.2. Then I just, on my LOI, I have all 3 tabs open, and I put the first offer here. 320, what do we say? 35%, whatever it was. And then 5, 2, and then 0. And then I'll just send this. But here's another thing I do. I would most likely, depending on how much I'm asking to carry, I would increase this by 5% more than I underwrote it. I would decrease the interest I offered off of my initial offer from what I underwrote it, and I'd offer a little less on the asking price. So instead of, let's say they're asking 3.2, I'd offer 3.1. Just so I have enough wiggle room. And I always offer 10 years. No one likes 10 years. It's very rare they say yes to 10 years. Especially if you're going through a broker, because the broker is going to just say, broker's their filter. When you're direct to seller, it's a lot harder to be like, to think an idea is crazy. You know, a seller is going to be more open to it. When they're going through a broker, they're confident that they can say whatever they want to you because it's not coming out of their mouth to you. So the broker's kind of like their filter and their protection.
So
So
Ed, what about if this is like a 5-year hold? How would you structure it? Would you still do a 10-year payback
I
to
would,
the on the seller
I don't care
financing?
I don't care what my exit strategy is. Give me 10 years, let me work.
Sure.
Because what happens in 5 years, you're like, damn, I want to keep this.
Yeah, right.
What happens in 5 years, you can't sell.
Mm-hmm.
That's even worse. Or 5 years, the rates are 0.5%. You're like, oh my God, this is amazing. I refi everyone out and I keep it.
Mm-hmm.
Leave less to chance and more to preparation.
Yeah,
In
sure.
10 years, if this property is not profitable and making money and has huge appreciation equity from today, you have bigger issues on your hands than the offer you negotiated. Your operations were terrible. Like if any property that someone buys today isn't positive 10 years from now, barring the world catching fire, which is impossible to predict given our track record in the last few months, your property has no reason not to be valued much more than what it is at today's purchase. So that's something to keep in mind. In 5 years, can I say the same? Not as confidently. You know, 5 years ago, if people told you we'd go through the market we did the last year, they call you crazy. 5 years ago, we didn't know what COVID was. Like simple as that, you know. So that's why anytime you're making an offer in regards to seller carry, even when you're talking to lenders and our debt calls on the Wednesdays, will touch base more on that. Is do you want to have an exit strategy, but have a worst case scenario? Like, what happens if something goes wrong? What happens if rents aren't what you think they are? Rehab's more expensive than you think it is. Whatever it is, like, what are you doing to cover yourself? Because you can be the best underwriter in the world, but unless you have a crystal ball seeing in the future, which if you do, shoot, help me out. Like, let us know the secrets. We don't know what's gonna happen. And if anyone says they did, you obviously you want to be best educated, but shoot, if we all knew what was gonna happen in the future, we'd all be billionaires. So that's just my perspective. You want to make sure you're covered. And is there any questions on that? So I'm gonna go over just like one or two pushbacks I get from that as well. Anything on that? This is open, by the way. It's not just Will and I chatting it up. Feel free, jump in if there's any questions, anything you guys want me to discuss in addition to that, please let us know. If this is valuable, great. If it's not what we anticipated to do, that's usually how these go. We kind of go on tangents, but the pushback you're gonna get a lot of people say, brokers especially, oh, if you're able to, or why are you asking for seller carry if I can get you a loan? Or why are you asking for seller carry? Can you just get a loan yourself or close on a deal without that? My favorite response, and I guess it's not doesn't have the best return on positive return because it's a bit of a smart ass comment, is I can negotiate with the seller, I can't with the bank. Obviously, that's a very like sure you possibly can, possibly can't, but I look at it like this: if the seller's really interested in selling, they'll talk. If they aren't, all right, have fun. Because right now you're playing the waiting game on this specific deal. Like it's like a rock and a hard place. You're at your numbers, they're at theirs, and you're the broker in the middle looking like, hey, I've done everything I can. Why not explore this option? So one more thing I put in here that's a recommendation by a broker of ours, not mine, but a broker we're looking at a deal for, the 970 some odd units in that we're looking at in Georgia. He gave this piece of advice, and it was actually very interesting. At the end of the agreed upon balloon term of 10 years, we'll refinance the property contingent on the interest rate being under 4.5%. Now that sounds ridiculous because they're like, I don't know what the rate's going to be. I don't know what this or that's going to be. They don't like putting it up to chance. I'm like, okay, cool. But then when they come back and say, hey, I want 5 years instead of 10, I'm like, you pick the years or the contingency. Like they can't have it all their way. That's why anytime I say when I submit an offer, if they take one of these off the bat, I did something wrong. Because I lowball the offer I underwrite. And I don't mean lowball in like a disrespectful sense. It's I know there's gonna be negotiations to this. I was talking to someone today, they're like, don't ever offer the offer you're willing to pay. And I'm like, yeah, 100% agree with you, because it's just not gonna happen, especially if you're not coming in. You could come in and asking and still be pissed off. Let's be honest. Like, they'll ask for 3 million, you come in at 3, like, no, I want 3 too. It's like, then why are you asking me for 3? It sounds ridiculous, but it's really not, actually. You're usually gonna land somewhere in between. My favorite thing is when they come back to me, say, I want the, well, okay, assuming this is a higher number, I want the price of this, but the terms of this. I'm like, cool, that's what this is for. You get, pick one. Like, if you want price, cool. You can have the price. You don't want the 10 years, cool. Bump this up to 45. I don't want to do 35, I want to do 25. Cool. Give me 15 years. And I'm not starting this for the first 6 months. See, I can't tell a bank when I buy a property, hey, I'm not making payments the first 6 months. But if I tell a seller, it's whatever we negotiate. Hey, until I stabilize or at least have some of the rehab done, we're not giving you anything. Your property's in such bad shape now. I'm overpaying and I know that. But in order for me to make sense of it, I need a buffer until I can get our ducks lined up and the rehab get the ball rolling. You just bought yourself kind of like a year almost, given how long escrow and X's and O's are going to take. And it allows you to have more time to play around with it. What I'm going to do is LOI time. So I'm gonna put together this and create the link so you guys can all access it. Please, please, please don't forget to make a copy before you do anything, because if you play around with it and don't make a copy every time, you're gonna lose it. Like, I have every single LOI I've ever created on this saved. Part of the reason why my computer probably hates me, but too bad, so sad. So is there anything on here that someone would, when I give this to you, because this is essentially how I'm going to give it to you guys, anything on here that someone want an explanation on, due diligence, for example, what this all means? Also, please, 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 huge reminder, if there's no loan assumption, please delete that, because you're really going to throw people off. Obviously, if there's a loan assumption, regardless of how else you're purchasing it, if your intention is to assume the loan, make sure that's in there. And make sure it's contingent. Like, that's one of your due diligence. Like, it's not even due diligence, it's beyond due diligence. Like, your due diligence is one thing, that's your end and what you take care of. Your contingency with the loan assumption is an absolute must. Because if for whatever reason you get to the closing table and the loan can't close, or you don't qualify, or the assumption doesn't go through, or something happens, if you don't have it written, the buyer has no, or sorry, the seller has kind of the leverage in regards to, hey, you said you were going to close on this. Doesn't matter if it's not realistic. It's, hey, you said you could do this. And it doesn't matter if it's right or wrong, it's what's written. So make sure you always have contingent on loan assumption, and the buyer to assume on all 3 offers.
And can you share the, sorry, man, could you share the legacy calculator as well with us? That'd be awesome.
Legacy one, okay, so legacy is a mastermind as a
Or
product.
not, or whatever the calculator was that you used to show the breakdown with the seller carry.
So legacy calculator, it's through Legacy Wealth. I'm not allowed to share this one with everyone. I will see if I can create my own version of it. That's going to be a little bit of a knockoff of this. This one I did get through the mentorship, so respect to that. I can't share it with everyone as much as I'd love to. The template I'll send to you guys though, and then the calculator. I would try to create something like a middle ground of what the napkin is and what the legacy one is, because I've actually made edits to this legacy one myself that they don't have, like factoring additional income here and here and here, which really helps with calculations. And then there's more variations I can implement here if I needed to.
Either that
One,
or could I, sorry, Ed, or either that or could I maybe sidebar with you and we can plug some numbers in?
yeah, if you ever have a deal that you want me to run through the calculator and explain it, I will always do that. I just can't send you a copy.
Sure.
I feel bad if I did, and
No, I
I'm
appreciate that.
paying a lot for it, you know? So what point do you make the decision to submit this triple offer letter of intent? So actually, I love that you asked that question. I'm curious to see if anyone has their own timeline that they have in regards to sending LOIs or what their process is. Because I'm gonna be honest, I feel like there's different types of people with this. I'm always send it and let's see what happens. I will, even if I don't have all the information, I'll have the LOI ready. So essentially what I do is, let's say you come to me and say, hey, I have a rent roll and I kind of have a T12. Or I have just the OM and there isn't much info on the rest of it. I'll prepare the LOI and I'll tell the broker, hey, I have an LOI ready. Let's get on the phone, discuss it. Let me verify some of the stuff that I'm assuming. And I'm going to play more conservative, obviously, on the offer because I don't have everything. And then I'm going to send it. Because I look at it like this. If we're not sending out offers every day, how are you going to get a deal? Whether you have a plan or a buyer or partner or investors or all that stuff lined up, obviously that's important. But just get used to sending an LOI. And they're most likely going to counter. And then when they counter, you figure it out. For example, there's a 5 building portfolio that I sent an offer on. I didn't even send a proper LOI. I just sent him 5 numbers saying, hey, this is what I'm offering. He's like, how about the due diligence and times and the stuff? And I just sent in a separate email. It was the most informal LOI I've ever sent. He emails me back saying, hey, we have call for offers. Is there anything you want to change? I'm like, no, you have what I have, what I'm thinking about offering. Mind you, I was like 2 million, 2.5 million less than their asking price on most of them. And he's like, all right, cool, you're on to the second round of offers. I didn't even send him this. Like, I didn't go that far. So I always say if they're a call for offers or if you're talking with a broker and you have the information you need, just shoot the shot. If anyone has a different opinion or a different approach to it, I'd love to hear it. I'm always on the more aggressive side of sending the offer and seeing what happens. Now, does that sometimes come to bite you in the back? 100%. But I'd rather send too many offers than not enough. That's just my approach. That's why it's nice for me to have someone that'll balance me out. Like, hey, how about we really think about this price? I'm like, okay, fine, I'll give you that. You know. Will, how often do you guys send offers? How many offers do you guys sending out?
Sorry, man, I have to unmute myself. I mean, we've been throwing out LOIs almost every week. It's just a matter of trying to get the, it's just sellers' expectations right now are not matching
100%.
reality. So yeah, we're trying to get something done. So
and I agree with you. And but that also comes with the things like use time to practice, use the time to get comfortable. Like the same way we get on the broker calls to the same way we get on the broker calls to get used to talking to agents. That's just the initial conversation to get what you need. When are you going to practice how to respond to the LOI or going over the LOI, explaining it, telling the broker, hey, I'm offering this because of X, Y, and Z. And like that practice is as important, if not more important than the initial phone call. Like you could get to this point of the deal, and if the deal's dying every time, what's the point? And that's important with the KPIs and tracking where what your strong points are and where hey, maybe you have to change some stuff.
Hey, Ed, I have another question on the LOI, and sorry I'm taking up so much time here.
No, I appreciate it.
So what are other contingencies that you put into your LOI? I know, people have, kind of, coached us on, an appraisal contingency, of course, different financing contingencies. So yeah, I'd love to hear kind of how you approach your contingencies.
Awesome. I love the question, again, remember, this is the part where the deal itself does have a large part to do with it for two reasons. One, is it a capital raise that is a large amount? Because at the end of the day, you can have a 10% capital raise of 100 million, and then you can have a 50% capital raise of 5 million. Obviously, it's completely different monsters. So if you have a large capital raise, give yourself as much time as you think you need, and then add some time to that. So generally, we'll do 60-day due diligence, 30-day contract closing after that. And remember, just because you have the 60-day due diligence and the 30 days, the 60 days does not start until the seller gives you everything they are supposed to, which 9 times out of 10 is not going to happen day one. Earnest money, you want to keep as low as possible, obviously. And you want to make sure that the earnest money. Okay, let me say that again. Earnest money, you want to keep as low as possible for yourself. But more important than keeping the earnest money low is that you want to make sure that you don't ever let it go hard. What that means is if you back out for any reason, doesn't matter if it's a loan, if the roof fell down and the building collapsed, or if a storm came through the city. If you allow the money to sit there and in escrow and it's a hard EMD, you have a chance of losing it. Obviously, I kind of use extreme examples, so take a it's not necessarily that straightforward, but don't put yourself in a position where you have the potential of losing. The last thing you want is a deal to fall apart and you don't get that deposit back. That can kill you in this business. Or the times where I've seen it happen and people are the most prepared, of course, anything could happen, you never know. But you want to put as many barriers in place to make sure that it doesn't happen. So EMD is going to be a big one. Excuse me. And then investing, that's just a simple one, where essentially what's the property going to be held under, like who's like an LLC or whose ownership or whatever. And those are the two big ones. When you're assuming any loan, at least what I've been told is you're looking at least minimum 3 months usually, just to get the loan side of things taken care of. If you're acquiring a new loan, this is where it's very important to keep in contact and open communication and everyone's on the same page regarding the timelines, because your lender is going to be your best friend. Like, make sure they're aware that the X's and O's all check out. They give you the green light on the timeline that you're suggesting, and that it's even realistic from their end. Because that can all, once you're in escrow, you don't want to have that back and forth of, oh, I need more time on this, or oh, we're cutting it close on this. I've been in escrows where I almost pulled my hair out, and my hair is the one thing I actually have going for me right now. Just kidding. I just really like my hair. Because we promised more than we can actually handle. And that was realistic. It was the most exhausting, terrifying 3 weeks of my life. We got it done. It was a miracle that deal closed in time. It was a $90,000 EMD on the line. That was not fun. So don't make the same mistake I did. My lender to this day does not let me hear the end of it every time I see him. He's like, I can't believe we did that. I'm like, you remind me every time and I still can't. So open communication lines. And that's the biggest thing. Make sure you have boots on the ground and inspectors waiting as you get closer to the LOI becoming a serious reality. You want to make sure all that stuff's taken care of, because that's going to take the longest. Also, make sure that you tell the seller, we want to walk into every unit. I don't care what you say. Until you walk every unit, don't believe anything they tell you. I've heard stories through other people and mentors and whatnot, like they've gone inspecting every unit. The seller said, no, this can't see this one, whatever. They got in and realized the place was stripped down to make up for the lack of the other units. So until you see it for yourself, don't believe everything they tell you. Just in general to cover yourself, especially big ticket items, HVAC, roof, plumbing, electrical, anything that you can see that's like, oh, this can be a problem down the line. And especially I know East Coast and colder places where you have more like different heating system, and at least out here in California, it's a little different. You definitely want to look out for that stuff. And that's the big part of the due diligence. You don't want your first deal to be your last, essentially. Any other questions on that? Does anyone have a deal that they want to run through, or should we just keep this topic? What do you guys want? We're gonna make this kind of free for all. You guys kind of let me know what you guys want to do. If not, I have a deal that I can find. I can find a deal essentially and just do our typical going through the T12 and stuff.
If no one else has one, I mean, I hate hogging
Please.
our Zoom.
No, no,
Man.
trust me, I'm enjoying that you are. It's giving us more stuff to talk about, and I'm sure the questions you're saying other people have thought of because you're asking very good questions.
All right, so I have another deal here that we're looking at, Chattanooga market. So just let me know what information you need, and I'll try and pull this up.
Okay, how much have you looked at this?
Walked the deal today. Talked to the broker. Yeah, 32 unit deal. Smaller than what we typically look at, but yeah, I mean it's close, 20 minutes from where we live. So you know, we're thinking about even self-managing it, which is something that we've not really considered doing on some other deals. Yeah, so we've this guy, the current owner, kind of give a little bit of the backstory. Actually just purchased the property 5 months ago, and he's a local developer in the Chattanooga market, and he's basically trying to flip it. He bought it from a distressed seller. Based on what I can see, he paid 1.9 million for it. Based on the underwriting that I'm doing right now, I'm coming up with around 1.7, 1.8 million dollars for the deal. Guidance is 2.5. So yeah, according to the broker, you know, he's basically going to say F you if I come in with an offer at 2 mil. Which I think even is a little high, but yeah, love to kind of work through it.
So do you have what information do you have about the property?
Yeah, I have quite a bit. We got T12s, rent roll, you name it. So
Have you done like, so we can plug it in to the napkin, but since you guys are thinking about offering on it, I'd say why don't we just run through something a little further, a little bigger, like a deeper look into it.
you want
to current rents, additional income. Actually, let's just do the T12. That should be fine.
Yeah.
You're okay with sharing all that stuff, or do you want to just?
Yeah, that's fine. I can even share our kind of the underwriting that we've done on it if you want to see that.
Okay, I'll let you take it away. How do I make you? Hold on. Okay, you should be able to share your screen.
All right, let me pull this up. Sorry, everyone. And I was messing around with some numbers on it, so I may need to revise that again. Okay. All right. All right, you should be able to see that now.
Got it. Okay.
So this is just kind of the summary page of what we're looking at. I don't know if we've uploaded, if he uploaded the T12 on this one. This might be from, that's the Uptown property. I don't know if Aldo added. Anyway, here's, I'll just kind of give you a breakdown. So 1972 build, 32 units. You know, this is just some basic underwriting that we've done. Loan amount, 75 LTV, estimating a 6% interest rate with a 24 IO period, 5-year hold term. Yeah, 75 LTV. Rates I know just went up again today is my understanding. And I see Jerry's on here, so I'm sure he can talk through that. But heard it went up another like 15 or 20 basis points. Is that about right, Jerry? Yeah.
Yep.
Yeah, so we're putting in at a 6 right now. Currently 97% occupied. I think we have it on here at 93%. Well, I guess it's a 5% physical vacancy with a 1% bad debt and 1% concession. Average rents right now are $610. Pro formas in the area are $770. So about $160 per unit upside. According to the broker, they're saying, so there's 12 units currently of the 32 that haven't been renovated. And so they're saying probably around $5,000 per unit. Looking at the building, I think $5,000 a unit is low for what the renovations are going to need.
For $5,000 for all 32 units on that math, or just the ones that need work?
Just on the ones that need work.
Okay.
I think we're underwriting 10 here on the renos.
Okay. Do they have additional income coming in at the moment?
$30 a unit for water.
That's the only one they have?
That's the only other income right now. Yeah.
Okay. All right. What's the current expense ratio?
Current expense ratio is coming in right at 30%, which we thought was a little low.
Mm-hmm.
We're underwriting, let's see, I can come here to the annual cash flow. So this is currently shown at 33. We did add some, but that's still, I think, low. Typically, you know, this is a C-class asset, so.
Okay, so I think I have everything. All right, let me. Options. Okay, I'm gonna take over on the share screen.
Yep.
This looks familiar.
What's up, Aldo? I'm just trying to hog the Zoom over here, I guess.
I can see that.
All right, can you guys see my screen? What screen?
Yes,
can you
sir.
see? You can see the calculator, right?
Yep.
Okay. So, and I think Jerry can jump in and add to this. So, are you guys writing 75 because that's the leverage you're seeing, or because it's not what I'm hearing is common right now?
That's the leverage quoted to us by the lender.
Got it. Okay, good. So they, for this specific deal or in general?
This specific deal.
Okay, good, cool. So let's say it's a 2.6. I have 5,000 for all units, so totaling around 160. 610, 770. They have 30 right now. I put 50 just because you can possibly add a few more things with rubs, parking, hopefully, just kind of 30 seems a little low. I bumped expensive 45. Current occupancy, sorry, I missed that. Did you say how much that was?
Currently at 97%.
Okay.
Hey man, my bad. I misspoke. I had Uptown in my mind. We've not gotten a quote for this Cleveland deal.
Okay. So we can look at that in different ways. But we'll be able to run a few scenarios. So off the bat, the question I always ask is it realistic in that area for doing that amount of rehab to jump the rents up 160 a unit?
So Aldo can jump in here as well, but based on what we've seen with comps in the area and similar asset classes, I mean, I don't even know if we would have to put that much in renos. I think we could actually just straight off the bat get the 770 a unit. There's probably a few units that would need some money, but based on a lot of the comps in the area, I think we can easily get that $1.50 to $1.52 per square foot.
I see. Okay. Cool. So here's a few scenarios I guess you can do. If you're doing just a straight offer, let's say you go to 2.2, what's the exact return you'd be looking to get on this? Like, what's the target number that you guys want?
Like return numbers and expectations.
Yeah, like are you more cash on cash focused, or is it
We'd like a combination. We'd like a combination of, the LPs ending up getting close to or above double digits cash on cash, like 10 plus. Like to get to 2x equity multiplier. And, I guess in 5 years time, that's inching up close to 20% IRR, to operations. Now we're okay if the IRR and the timing is different, as long as we're hitting that 2x multiplier, but not to exceed 5 years.
okay. Yeah, so this specific scenario at 2.2 bring it 10.2 cash on cash. Obviously that does factor in the higher rehab, but again, better safe than sorry on that end.
Is that 10 to the LPs? Because we are doing an 80-20 split, no pref.
This is just total. So if you were to do it, essentially you do this.
So we'll probably be looking at something around 12.
Yeah, so this would be what the LPs would get, would be 8%.
Right. So, that's another question. It's like being one of our first deals to get on the bag, we want to make sure that investors get good returns on this. But then of course that's relative, right? Maybe some people are okay with 8%. That's that's a question for another day. But what kind of returns most people are looking for?
Are there investors on this call? I mean, what do you guys like seeing?
So I think Alicia, speaking from what I've been kind of the conversations I've had, is as important as the return may seem to us, an investor's most important question is going to be how quick can I get my money back? Obviously, they're investing to make money. That's a given.
Right.
That's why they do it. But no one that is in a position to invest did it by losing money on a deal. Like, your goal is to get them their money back ASAP. And how is a good one to answer, two question to answer. But the return comes down to, okay, does it make sense and what's the risk? So as much as like someone can say, hey, I'll give you 12%, but it's risky. If you're like, hey, I'll give you 8%, but I can guarantee, like not guarantee, but I know it's safe, or I'm confident in X, Y, and Z because of the market it's in and this and that factor and this component, then it's like, okay, that makes more sense. Like maybe they don't need the 10% return. They're okay with 8 because it just makes more sense for their style. Also, one thing you have to do, one thing to consider when asking that question is, who are your investors? Do you know who they are and their type of, same way you have different type of buyers, you have different type of investors and X, Y, and Z.
Gotcha, man. That's super helpful. So, you know, I guess one of the things in this deal that it is close by and we have, you know, we have our eyes on it.
I personally love anything close to home. As much as LA isn't everyone's favorite place to invest, I will always try to get a deal in LA if it makes sense. That's the hard part, the making sense part. But if I can, I want to build a property management company. I manage the properties I have now here. I want to build it as I build my portfolio because it's just like another arm in the business, a vertical that will, because I enjoy it. I think that's the bottom line. I don't recommend everyone to do the property management if you don't care for it. But it's something that I do want to build because I feel like I have the resources and the people in place to do that. But 32 units would be a lot for the first one, but it's not out of the realm possibility. So back to the conversation like Will that we were having earlier. What happens if they're asking for 2.6, you said?
2.5.
2.5, okay. You're not far off now. Yeah, you have to ask them to carry 20%, but that really comes down to why are they selling?
Mm-hmm. Yeah, and so, you know, what they've shared with us is this guy, again, is a developer. I think he just got this lot approved to add 8 townhomes as well on it. So the zoning's done. You know, that is an option. But you know, it sounds like he's just trying to get the money out to put into other, you know, other things that he's developing currently.
Okay, so it's funny because that's the same scenario I have about a 6 unit here in LA. And he's asking for 2.6 on the 6 unit, but he bought it 2.5 years ago for 2.2. After it had been on the market for a month and was originally listed at 2.4, and it has assumable debt and all the bells and whistles. So I actually had this conversation with a broker a few days ago. And the question that I was asking is, what happens if he can't sell? Is the first one. And the second question is, you said he bought it recently for 1.9, you think? How long ago?
Correct.
That's what's on the tax records. It's like
How long ago was that sale?
August of last year.
Okay, that's funny. So mine was 2.5 years ago when the rates were at 3%. And the guy's trying to use the assumable loan as leverage. My question was, what has been done since then to justify the price now? And it's not even like an ego thing that I don't want to pay this much more because that's not what it's, because someone's making a lot of money on it. It's, what have you done for the value of the property to increase by that much for it to make sense for someone purchasing it today to then add the value that they need to?
That's a great question, Ed. That's a great question because, you know, to their own admission, they're saying that, you know, he's not pushed rents more than 10%.
Mm-hmm.
So, you know, it needs to be, you know, he has to have done something intentionally to drive up the value of the property. And I'm not sure that they have.
Yeah, and according to what you get, what Will was saying earlier, if you even offer 10% more than they bought it at, they're going to be upset.
I mean, that's what they say. That's what they say. I mean, but
of course, I'm no mathematician, but like make it make sense, you know. And it's not even an ego thing; it's like a logic thing. Like you're also going to probably get a worse rate than they had too when they bought it.
sure. Well, they bought it cash apparently.
Yeah, he has it free and clear. And he
Cool.
said, I mean, if
Yeah.
he doesn't get his price, he's just gonna hold it.
Hold on, that's perfect then. How much money does he need for his rehab, for his project?
Yeah.
Because then you give him that money and you sell carry the rest. Why are you gonna? How much do you need? Add whatever fees he's gonna have to put out from closing to broker to XYZ, and then you offer that. And if it's a lower number than 2 million, hey, here's 2 million up front. Whatever the difference is between what you need and 2 million is go on a nice vacation and thank you for carrying the rest of the asking price.
Hey, Ed, why don't you just close this one for us and we'll pay you a fee?
I don't mind talking to brokers. I love it because they hate brokers hate talking to me about stuff like this. Like the broker that it's funny the timing of this because I literally had this conversation last week, and the broker's like, "Oh, you know more about this property than I do." I'm like, "That's the problem." Like I shouldn't know more. He had no idea when he bought it, how he bought it, what the list price was when he bought it. So if you find that stuff out, you're playing with ammunition that the broker didn't do their due diligence on. And it's sad to say because you would think like, okay, if I'm taking on a deal, I kind of understood it from my end because a $3 million here, it's not crazy volume for that particular broker because I know he does massive deals. But if 3 million is a big deal to a broker, you damn well better care about it. Like you very well can lose that business quick. And another thing I would leverage too, depending on how much it is and how much it impacts your numbers. I've even thrown out there amongst the team, like if it means we have to carry or pay the agent's fee in addition to the principal, I would consider that. I wouldn't offer it off the bat, but that's like a cherry on top kind of incentive. Like, hey, we'll give you this much, you sell or carry this much at this percentage. Oh, by the way, we'll take care of the agent's fee. Not in addition to the principal. Because anywhere you go, you're gonna have additional fees and stuff that you have to worry about. So paying that small percentage isn't a big deal.
What does this look at? Just out of curiosity, 2.4. Just plug 2.4 and see what that number is.
Aldo, were you here when we were looking at the LOI or you came on right after that?
I came on after.
Okay, so I sent everyone a link to the LOI. If you haven't received it, please let me know.
I got it from Will.
Okay,
I
perfect.
emailed it to him.
Perfect. So that LOI essentially is how I offer on majority of properties. As you can see, the breakdown of the percentages and whatnot, you just have to play around with. Like you're gonna get used to. It just depends the deal. Like the example I was using is assumable debt's gonna be lower leverage, so you're gonna want to make sure that you your seller carry works on that. Also, in this scenario, if the guy says, "Hey, I only need 50% of the money," have him carry 40%. Why not? I always look at this. You don't know until you ask. If he doesn't know, then you aren't gonna do the deal anyway.
So that would look like a 10% down payment, a 50% leverage, and 40% carry. Essentially.
Which one? The scenario.
What you just said.
Yes.
Let them carry 40%. So what does a seller, forgive my ignorance, what does a seller carry back? Okay, you probably already went over this. What does that look like? Is that him just taking out a loan on the equity, or just basically
Like owner finance?
So the seller carry, it's a great question actually. The seller carry, essentially how it works is it's money they do not receive at the time of close, and you have another agreement in place on how you're going to pay that money back. Now, there's a few ways to do it. Lenders will usually say you're not allowed to have a second position, which is fine. Doesn't kill the scenario by any means. It just means you have to get more creative. Ways you can do that. You can have them on the LLC, but you make their allowed, I guess, like call to foreclosures very specific. You have them as part of a separate agreement, which means, hey, we pay you this much in this amount of time. if we don't, you have every right to close on us. And then when
So that doesn't give a second position out, right? On the loan?
they're part of your LLC, no, no one will ever know that they exist.
That's interesting.
Same thing with like, if you go to single family space with the sub 2 and the seller carry and all that stuff, it's very similar.
Yeah, I'm not familiar with that, so I'm gonna have to do some homework.
And I can help you guys with that too and talk more about that. But essentially what the seller carry angle is the best case scenario for the seller is that you don't make your payment to them. And that's how you gotta lay it out, because that builds their confidence. Best case scenario is we screw up.
Mhm.
If we screw up and everything goes wrong, the seller wins. The
So is
seller,
there in the contract then, if we lose out on this property, you get the property, you get the deed to the property back?
they can foreclose on it. That's how they hold you in check. If you miss mortgage payments, like on a loan or assumption, whatever the case is, they can essentially jump the gun on that and sell the property again. It's because they have a stake and they get paid out.
Sure.
Look, at the end of the day, if they think you're gonna screw this up anyway,
They're not gonna sell it to you.
then yeah, then they why do they have confidence you can close anyway?
Right.
You know, and if they are so worried about the what ifs if everything goes wrong, then you probably don't want to deal with that anyway.
Right.
Unfortunately. But always, like, we always throw around the options. We always, and like I said, like on the LOI, our highest offer is first, but also the one that's most favorable. You know, what's funny is usually the one that has the highest price value.
Mm-hmm.
Because
Because of
personally,
the seller carry.
go ahead.
Is it because of the seller carry that it's the most favorable?
Because here's the thing, as much as a broker may know what it costs for me to have the capital that I do, they don't.
Mm-hmm.
I don't know what the capital is going to cost you until you tell me. Like you're explaining earlier. But in order for me to assume I know what your cost of capital is and what'll make it a good deal or not is unrealistic. Well, what makes it a good deal and what puts me in the driver's seat is knowing that what the agreement the seller and I have. So if I know what the seller's offering me, where the remaining 65%, for example, comes from, is none of their business. If I want to go raise the remaining 65%, oh, I'll go raise the 65%. If I want to go raise 10% and get a 55% loan, I'll do that too. How that comes about is none of their business. You just want to make sure that you know you can get it one way or another.
Mm-hmm.
That's when brokers are too worried about counting your pockets than they are closing the deal.
I'm assuming it's part of trying to vet people out too, so they can close the deal.
100%, you have to know how you're going to close it. That I don't care what you're offering. That's the bottom line is you have to make sure you can close, whether
Sure.
it's through a loan, whether it's through raising the capital, whether it's a guy who will buy it, like partnering with someone, or using the word I don't love using with the wholesaling thing. But one way or another, something has to happen for you to want to have the confidence that you can close it and that you can relay that to them. And at the end of the day, if you can't close it, this is all pointless anyway, right?
Sure.
So it really comes down to, like what we were saying earlier, I don't think you were here yet, is when brokers ask, like, why are you seller carrying? Why don't you just buy the deal outright? Well, first of all, you can negotiate with a seller. A bank's not as friendly. Second of all, if that was the case, this probably would have sold already. Like anyone that tells me that the property's been listed on the market for 150 days, I laugh. I'm like, I'm telling you the same thing everyone else in the market's telling you. I'm just bringing you a solution. If you don't want to take it, don't. I don't care. I've been laughed at by invest or broker for calling me crazy because I wouldn't buy the property at the price they wanted. It's still on the market. That conversation was in August.
We got one of those.
Yeah. And it's fine. Just walk away. I've hung up on brokers before. I don't care. You sound ridiculous. You sound stupid and you don't know what you're talking about. I'm gonna hang up on you. If they don't like it, call me back. I probably won't pick up, but whatever. I go, it doesn't. I just don't take it personally, move on and send another LOI. Like, what the heck do I care? And it's fun. We have fun with it. At the end of the day, we're trying to make deals happen. And we're trying to get creative with it. So I love how I haven't once opened the napkin underwriting template, but let's just pretend we did with this crazy legacy one I'm using. Anyone have any questions on that? Because I love stuff like this. I obviously can talk about this all day. It's already hard enough for me to shut up at times, but anyone have a deal they want to look at or want to actually go over the napkin underwriting or want to plug in more into this other calculator or just see how they would write an LOI on a different property, you guys let me know. We'll be on here for another like 10-15 minutes. All right, so Linda, I appreciate you putting your name in there. Chat and putting all that information. You definitely faked me out because I scrolled up on the chat and I saw the message as soon as I said that. So I was anticipating the question, but I give you A+ on the trickery there because you definitely fooled me. So here's a question as well, and I think Will and you guys had kind of gone over it. What does everyone think is considered a good deal, if that makes sense? Like I'm very curious about that. It's actually funny enough. I had an old coworker just text me and they're like, "Hey, if you have anything in these areas, look, I'm looking into multifamily. Let me know." I'm like, cool. What do you consider a good deal? I don't know. It depends. So what do you guys consider a good deal? Put it in the chat because I don't think besides Will and Aldo, you guys don't like unmuting today. So we're just gonna say put it in the chat for now. Will and Aldo, I appreciate the participation. But I'm really curious to see what okay, that's a good one. That's a good start. Upside. What amount of upside is worth the headache of creating that upside?
An A-class property in LA, set pristine condition, selling at a 10 cap. That's a good deal.
I can't even make up a scenario where that's possible. Like
That's why
But it's a
St.
good
Pete is a
deal.
billionaire.
Oh, I know where you can find that. Toys R Us. Oh, no, you can't. They don't exist anymore. I'm just kidding. Oh, man. We don't have Toys R Us either. Damn. Oh, that is from bad to worse. Jeez, this is why I'm not a comedian either. Oh, that was bad. Cash on cash and cap rate as KPIs. Had a hard time setting benchmarks. Okay, cash flow, okay. Cash flowing 1% with lots of potential for upside within 5 years. Cool. What are some exit strategies? I think besides like it's very easy. Again, this is just me personally. I'm stubborn in the sense where if I don't have to sell anything, I won't. I don't like selling things. So I always look at, okay, if I can refinance, that's the best exit strategy. What are some other exit strategies that people may prioritize? And why? Actually, I think I'm more curious about that. Are you talking about cash on cash with those percentages or IRR return of those percentages? If that's cash on cash, can I see those deals you're talking about? Did I read that right? Can I ask to unmute you? Is that gonna work? Nice.
I'd definitely like to see those deals too.
Yeah, I'd say. Okay. Huh. Interesting. Where? Yeah, exactly. I think you just opened a can of worms that you weren't ready for. Hey, I got dibs. I saw it first. I can kick people out. I think I can. Can I do that? That's funny. Luckily, we don't have 100 people in here like we sometimes do. To get at least 10% annual return, with the potential 2 times. And okay, now the 10%. Oh, okay. Here's another question, kind of like Will we're talking about on the deal on Aldo is do you consider what you're going to give your investors when underwriting, or do you just look at the underwriting as long as I hit this number, it covers all my bases? Because that's something like a perspective thing that's very interesting to consider as well. That I think gets overlooked is, oh, we're not paying pref, but we're doing this, we're doing that. Like, okay, does it still make sense for the investor at the end of the day? And so I'm gonna go on a little bit of a ramble here. Here's something else that I didn't mention. For example, Aldo, in the case that if you're not paying the investor pref, use this too, but have a hard time predicting future sales. How do you handle that? Okay, I'll get on that. Here's something to consider as well. How much of the conversation with investors that you're not paying pref to do you factor in and justify the timeline it is to get to stabilization? What that essentially means is, if I'm your investor and you tell me you're not getting pref, you're not giving me pref, but day one, hypothetically, we're not going to be making money. You have to vacate units. You have to do rehab. You're going to be spending money. You're going to have turnover. You're going to have that, not the ugly period, but like the, hey, improvements need to be made period of the process where you're not going to be making money. What's the timeline you would give for that? And what is that conversation look like? Because there's a set like standard level of expectation that needs to be made there. Because after 8 months, 14 months, your investors might be knocking on your door, literally or figuratively, like, hey, where's that 8% you promised me? So I'm curious to see what the conversation with like that is.
I can speak to that. I don't know that we've had that specific conversation with investors, but we have showed them, you know, transparently our underwriting. Here's what's going on. Here are the assumptions, and a lot of this rides on our ability to turn over these units and be able to, and the time frame that it takes for us to increase our, you know, our rents. And we tell them, hey, we're looking at an 18 to 24 month period, but we know internally we're going to shoot for 12 to 16 months. You know, and so the expectation for us is to be able to continue the operations the same, you know, as the, you know, the time that we bought it, right? That's obviously the expectation. And in our experience in operating in senior living, that's also the case. And so you continue the operations the same, and you just kind of plug in your plan into that, and it's going to take some time to go up, but at the same time, there's cash flow coming in, right? So, you know, initial year one cash flow needs to look pretty damn close to the 8%, so that we can give them that, and you know, they can start getting that on a quarterly basis, or however it is that we, you know, choose to pay them out. So the conversations we've had, I mean, they've been positive, they've been high level, and we've been able to get, you know, pretty soft commitments, because at you know, at the same time, in addition to what you were saying before about investors seeking the time frame of return, they're also betting on the jockey, right? And so we really have to let them understand where we are, and they have to see that. They have to see who's backing us. They have to see our you know, professional background, and have, you know, have had to have seen us in action in some sort of way to be able to, you know, believe us that we're going to not only return, but operate in a manner that's going to return. I just went all out there.
No, I like it. And so here's one of the things that I thought of while you're talking is, because you're mentioning the percentages and what you want to hit, and you want to be close to that 8% year one. I would also say, don't feel too, obviously be transparent. Don't ever lie to your investors, but don't ever feel like, hey, I have to be giving them X return every month on the dot and exactly what their expectation is. Because at the end of the day, you're not guaranteeing that you're going to give them 8% every month. Your average should look at like 8%. And if your average is 10%, then even better. And when space of acquiring total rebuilds or good rehabs. Okay. So the reason I say that is like, hey, if you're the investor and I come up to you and I say, hey, we're looking to raise this much for this throughout the process and time. We're gonna have to go through renovating X number of units. We project to do 20 year one, 20 year two, by the end of it, beginning of year two, by the end of year two, we should have all units turned. Let's say the building's 80 units. That's a lot of units to have vacant at one time. Are you gonna cash flow amazingly? No. If you're above water, you're happy, in my opinion, because you are in such a big rehab process. So in that case, it's like, hey, we are gonna basically walk through the mud for the first year and a half, 2 years, but then when the returns come in and we do start having the stabilization, that means we can get your money back quicker, because you still need to stabilize before you can refi. And it's like, hey, we're not giving you amazing returns now, but if I can get you your money quicker and you're locked into the equity on the deal, that's very important to mention. Like, a lot of people get the idea of once you refi your investors out, they don't own the equity anymore. I don't think that's the right play.
This is 13.
Sorry?
CX 113. 113. Yeah,
I think you're not supposed to.
113.
Okay, we got it. So the idea is, like, hey, maybe we don't give you 8% first 2 years. You're getting 4% or 6%. But at the end of it, we can refi you quickly, get your money back as soon as possible. Now we have, once it's stabilized at 12%, which is gonna come out to like 10% for them, let's say, or 8%, whatever you want to do. And now we can either go into another property and do this again, but your equity doesn't go away. Now your cash on cash is infinite. If you want to talk in the whole math of it, because their money's back. They can reinvest with you. They don't have to, but they have the option to. Obviously, you want them to. But at the end of the day, you did what you needed. You got the money and used it for what you promised and said you would, and you got it back to them safe and sound. And the equity everyone's happy with. So don't feel like the first 2 years you have to give them that full return, because honestly, they might prefer, hey, I don't care if I walk through mud for a little bit and get nothing, very little year 1 and 2, but if you're telling me I get my money back and now all of a sudden I keep that equity, sign me up. You know, that 8% is not making anyone who's investing 500 or 100, 150,000 into your deal. That 8% is not making them wealthy. Let's call it what it is. And if that's what's making them wealthy, then they're doing some shit. Like, I don't know what's going on at that point.
Yeah, it's the refi and or the upside that you're able to get into that, you know, and I don't disagree with you. I agree. I tend to agree with you. I think the only thing that I would mention for us is that on our first deal, we kind of want to knock it out of the park.
100%. I agree.
We wanna-
Actually, if
we wanna
anything,
do well.
I like your perspective and your outlook more because you have a buffer. Like, if you're already like treading dangerous waters your first 2 years, or when you're doing the rehab, something considered as well is, okay, what happens if that keeps going on or takes longer or something goes wrong? So I 100% agree. Like, obviously that's probably more like down the line when it's more of a copy paste kind of cookie cutter, you know what you have to work with. I 100% agree. And look, the same way I underwrite, the same way I send out LOIs, the same way I recommend everyone does, I'd rather be conservative on the front end than praying in the middle saying, oh my God, I hope this works out. You know, that's the reality of it. So no, 100%, I agree with you as well. And also I think it really just comes down to, it's like, who are you doing this deal with? Like, have you done it before? Because trust me, I'm on the same boat in regards to, if I'm not confident about it, I'm not gonna pitch the idea that we can do it just because I'm confident. You know, one thing I've actually told someone before was sell results, not ideas. You know, people are gonna, the ideas are gonna get you far, of course, and that's what they're gonna invest in. But at the end of the day, the results are what's gonna
So it's going to bring them back.
yeah, 100%, and keep you in the business, to be honest. Awesome, Nathan. Go for it.
How are you? I'm just going to chime in my 2 cents. I mean, I'm in on deals that I've invested in. When I invest, I mean, I'm in deals I'm GP in, and I'm in deals I just invested in. I like to be in a deal for a long time personally. I mean, if you tell me you're going to boot me out in 3 years or 5 years when you refi, I wouldn't invest anyway because it's investment for me. And is this the first big deal you guys have done like this? Because I mean, a lot of people expect like you do a 70-30 with them if it's your first deal because they don't know if they want to come back to you. I don't know if I missed something on this. I'm just a little confused.
So, for us, we're doing a higher split because we're not doing a pref.
Mhm.
So we'll do the higher split. We'll take less money. We'll make sure that we have a good return on this investment in the first time around, so that then later we can start, messing around with that, right? And so we're not in the business of booting out investors. We're in the business of making sure that they make money and they remain with us, whether we refi or not. The only time that the deal is going to end for our investors is when it ends with us, upon the sale of the property. That's
Okay. That's what I was trying to figure out, because you said it sounded like you're going to refi, keep the property, pay them off, and they're out of the deal.
No.
Okay. So I misunderstood. That's what I was trying to. I was missing that. Okay, that's cool. Yeah.
You're good. And essentially what it just to clarify as well, just to repeat it, it's like when you refinance, the cash on cash return at that point mathematically is I have zero cash in this now. The return is like there's no way to quantify it essentially. Exactly. All those doing it right. So I'm not saying that it shouldn't be
Yes,
low.
there is. It's infinite returns, Ed. That's what
There
we're
you
all
go.
about.
you
Infinite
go.
returns.
There you go. So yeah, and Nathan, you brought up a good point. Thank you for bringing it up and making sure we clarify, because I agree with Nathan. And let's be honest, if you tell them, hey, you lost equity on this one, do you really think they're gonna invest in the next one for you? Like, you just lost an investor. When there's so many other people that are willing to keep them in the deal, just keep them in and then hope they invest with you in the next one, because you exceeded the expectation you had set off the jump when they signed on board as an investor. So for anyone that is was kind of locked in that sense of what that structure looks like, I'm sure we'll be able to kind of come back to it and discuss that more. Is there anything else? I can't believe an hour and a half has gone by already. Will, Aldo, huge thank you for the participation. You guys are awesome. Anything you guys need me to look at or want some like input on, or with the seller carry stuff, actually, we'll touch base again. Let me know when you guys are available. We'll hop on a call. You guys have the LOI. And I'll work on something with the calculator for this, for you guys, something more further ahead than the napkin one, just so we can kind of play around with that. I think that'd be pretty fun. Combine a few different calculators that we've seen and we've worked with and what everyone's familiar with, because I think the more uniform can make it, in terms of whoever wants to use that specific calculator, it'll become easier to talk to each other and work together when it's one uniform method of analyzing, and you kind of know where everyone comes from. Trust me, we're not going to get as complicated and have 100 tabs like the Michael Blank one, because I'm not up for that. I understand it. I've used it. I can interpret it. I just don't want to do it. So well, on that note, it's so nice to get to work with someone that is trying to, of course. So at the end of the day, we're here every Tuesday, same time, same place. Please reach out to me if you have any questions. I can't believe I forgot to do this. I'll leave my phone number up here just for a little bit before I close out the Zoom. So if anyone needs it, feel free to text me, call me, work each week. I actually don't play around the links, so I'd rather not send you one that'll mess it up. If you're not part of the Facebook group, we'll get you on there. I will discuss with the guys who do that. I don't do a lot of the back end stuff. I just focus on this stuff, the underwriting and the numbers. So I would let the guys know that we should make sure the links are out there and clean and stuff. Trust me, I spend some time looking for it too, so don't feel left out. I will keep in touch with you guys. This is my phone number. Any additional questions? Andre, can you text me? I think that'll be easier. My number's in my name. If you can't see it here, let me do it here. See, I didn't even know it was a different link. You guys are ahead of me on this. So I put my phone number, email. I know you guys already saw in the chat. I will send these questions out. Just please text me or email me with any questions. I'll make sure we can take care of that as well. At the end of the day, we want to make this as easy as possible for you guys. Want you guys working together. And let me know how else I can help, please. If you guys have deals to underwrite, brokers to talk to, between the kind of JV version that I will try to do and the expertise that Peter has, absolutely. With the brokers, you know where to find us on Mondays. Tomorrow is advanced underwriting, if I'm not mistaken, which since we didn't do much underwriting tonight, then that'll be a good one to go to. We did some, it just wasn't the napkin stuff. But yeah, you guys are amazing. Yes, same time, 8 Eastern, 5 Pacific, which is my time zone. So y'all confuse me with this East Coast time zone, but we get there. Yeah, enjoy your night. You guys are amazing, and see you